Good morning to all traders and welcome to this Tuesday's market insights video on FX majors. It is the 8th of December today. We had Brexit talks continuing yesterday without actually reaching consensus. We have had a new deadline set from the European side as Wednesday for an agreement to be sealed. The issues, bottlenecks, around fisheries, the level playing field, and also now governance and dispute settlement remain unsolved, and pressure is adding up. This is, of course, reflected into the market, particularly on the GBPUSD and any GBP pairs, to be honest, and it's likely to have an effect going forward as well, despite the fact that Boris Johnson has finally also caved in. He's actually offered to remove any legal clauses from the internal market bill if, of course, they come into agreement. Now, at the same time, we have had news about a stimulus in the US, okay, that is actually coming closer. It's a total of $908 billion, if not mistaken. We are probably going to hear about this set of news as well at some point today, tomorrow. And what else is important to take into consideration? It's the fact that, governments are not prepared to receive the first shipments of COVID vaccination. Because, as you probably know, the Pfizer/BioNTech vaccination requires a minus 70 degrees storing, okay, which most of the governments don't have the capacity or the equipment to actually store. And the Moderna one, I think, is minus 20, so a domestic freezer would work. However, whatever the case is, governments are not prepared to receive the vaccinations in millions. Okay, they are actually getting prepared as we speak. Now, that said, we might see, of course, the dollar being affected once again. I'm not going to go into stocks. It's not the day for this particular one. But I will also talk about the euro dollar. I want to start, however, with the GBPUSD. As you remember, I think it was 4 sessions ago, we had WX and we're expecting Y. Since we actually reached around that level, I said that there is high chances that we're going to see wave X moving here, and this, instead of an impulse, would become a correction, and this is exactly what happened. Then we also said that we're expecting a new break above the previous high in order to consider this as a correction in wave X, and indeed this has happened. This has happened, right? We'll call this ending diagonal last week. We've got this now coming into play, and yesterday we had a huge decline down to around 132.50 or so, right? 132.20. We are seeing currently a pullback, in my opinion, right? So this is wave 3, this is wave 4. We could see this coming into place and then 5, or it would be a case where this is 4. We might see a flat or something, and then the 5th wave. And this 5th wave is going to be, is actually going to be the first minor wave 1. Then we're going to see 2, 3, 4, and 5. This is going to be wave A in the intermediate degree. Yeah, we're going to see B and C. And this is going to end with Y of this WX and Y move, which is primary degree move to the downside, and most likely going to get a new low, multi-year low, actually, if this indeed continues being the scenario over here, right? So the levels I'll be looking, once, of course, this correction ends, right, after the pullback, I will be looking to get to the 132 first, then 131, then 130. And it looks like, actually, as the market structure is currently at, it looks like that we're moving on 100 basis points, and we'll move it at very important figures, the big figures. Okay. Now let's go quickly on euro dollar. On euro dollar, we identified last week the break of this move to the upside over here, right? The break of the previous high. So we said this is not going to be a triple zigzag, it's going to be a double zigzag, which means this is wave 1, this is wave 2, this is wave 3, this is wave 4. I think we're going for wave 4, and then we're going to get wave 5 on the upside. Okay. Now this is going to be 5 intermediate, and we continue lower, okay, for a correction, or it's going to be some sort of continuation on the upside with an extended wave 5, okay, and most likely going to be, of course, a reversal down on the 106 rather than anything else, which seems to be a case as we speak, right? Now, for levels over here, right, we can go from 2 up to the recent high, yeah, and we can look at 0.385 and 61.8. So we could potentially, because we also see some sort of signal here on the downside, would potentially go down to 120.15, okay, and still remain impulsive. That's the case here. As long as we are above 119.21, we remain impulsive, okay, do not forget that. So it could be a case though where, well, for some reason we are going to have, as I expressed I think a week ago or so, oops, excuse me, I think I deleted the wrong one. It could be a case where we have an expanded flat, okay? Well, in this scenario, we would have one ABC, ABC, and we're gonna see 1, 2, 3, 4, and 5. If this scenario comes through, it means that we're going to break below 119.21, okay? So this will be my low validation level to determine which scenario is most likely to come into place. Now, MACD, a hidden divergence over here on the upside. It could be a case where we're going to see price move a little bit higher and then correct, which means we might get a W, X, and Y zigzag over here due to the depth of this correction on the upside. And last, dollar Swiss, dollar against the yen. Nothing changed here. I'm still looking at this as an correction to the downside. I'm waiting for another move to end wave B in the cycle degree and then move all the way up for wave C. Yeah, we've done A, we've done B, and I think this is this is 1, 2, 3, 4, 5. So ideally, we want this to be the same case. So it could be 1, 2, 3. This is 4, and we're gonna see a 5th wave. Okay, so currently we are still in wave 4 of this move to the downside. Okay, it could be a W, X, and Y. It could turn out to be a flat. Okay, ABC, ABC, 1, 2, 3, 4, 5, or well, could just even be some sort of triangle over here, right? Since we haven't really broken below the previous low yet. Okay, so this will be all for the day. Thank you for watching, and we'll speak again tomorrow.